The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We'll start out the show like we always do, the German DAX and the FTSE. As you can see, those ABCD patterns that we've been talking about worked out pretty nicely. We're in the midst of a correction right now. We just made a 50% correction on that German DAX, which is much more widely traded than we have in the FTSE, but it's still in a nice area. And we're in a Friday, and it's in an up week, so the chances of the market totally collapsing today are rather slim, but, you know, like they say, those two masked riders up in the sky, slim and none, the Chance brothers, anything could happen, and it usually does. We did make that pattern that we talked about in the S&P. That was that really nice three-drive pattern. You can see that with the green triangles. It also made a 1.27 expansion, and we sold off quite a bit. We broke below 3,200 after hitting 3284, I believe. So it dropped, 85 handles, and now we've rallied back about 20-some handles from that level. So this is what we're watching here over in the overnight. Remember, folks, when we started the show this week, I posted this chart that we got back from, I believe it was from Rich Anderson, forwarded on to me, but I'm not quite sure. This shows that the difference between the day session and the overnight session in the S&P. You can see the overnight session has a tendency to have a much stronger upward bias than what you see in the day session. I have no idea what that means. All I'm doing is reporting it to you. You know, that there's so much information out there, both fundamental and technical. You've got to define what you're looking at, folks. And I try to break it down to just simple things. You know, if the market's going up, there's more buying. If the market's going down, there's more selling. There's going to be times where they have strong resistance, strong support, and that's what you're looking at. Since we're talking about strong resistance and strong support, there is really strong resistance at 1897 in the gold market, folks. I don't know exactly where it's going to go from here, but we are in an area that is really, really interesting up here. At this, there's no fib number up here because we are far, far above. Just to show you where we are just this week, how much we've had a run here. I think silver's up 15% on the week, but we've hit some major resistance area at the 1895, 1897. We've been up there 3 times, folks, in the last couple of days and had $20 corrections. It did it again last night. We got up to 1897. We went all the way back down. It dropped about $20, I believe. So there's a lot of that now. We're not seeing that in silver, and we're not seeing that in the gold or in the platinum. The platinum is still trading below 960 and had a high of 975, so it hasn't backed off very much. But the fact that it can't go blasting through there yet, and the key word there is yet, I think really does mean something. Longer term, I think the gold is in a very bullish mode right now. But the thing that would really be nice, especially from someone that's a sold-out bull, is see a $65 correction, folks. And that's the main thing that I'd be watching for. So anything around the 830 level, let's try that again, Larry. $1,830 per ounce level, I think, would be a good thing to look at. So that's important. Today's guest, thankfully, is we have Mr. Shane Smolian, thewolftrader.com will be our guest. He's got some really good information on the virus and also on the Fed and what's happening over there, because the Fed is still in there, folks. There's no doubt about it. You can see the market's at a very, very elevated level, and that's pretty much. You have gold at 1,900 right now. Did it get there? Yeah, it just did. Thank you very much. Yeah, good. I thought it was going to hit there. 1904 has been high. Wow, it did it just on the time when I hooked up here. So it's going to be really interesting to keep an eye on that one. It's very, very important. I need to check one other thing, folks, so just bear with me here. This is a little housekeeping that I need to get done because I have to pay attention to this. And platinum's still trading at 960. Silver hasn't done a whole lot yet either, but let's just double check it just to be sure, because this could be a monster breakout. No, we're still trading at $23 an ounce. We did hit that long-term 1.27 and 1.618 level at 23.70. That was on the daily chart, on the weekly chart. I'll post that again so you'll be able to see that. So it's good. We're only $27 away from the high that we made in August of 2011 at 1931 per ounce. And above 1931 per ounce, folks, is blue sky. I think you'd be looking at a minimum of 2075 to 2350 in the long-term gold chart, and it looks like it's got all the earmarks of that. We've had some nice increases in open interest in gold, not so much in the silver, so that's pretty much. Ruby, I believe, was it April or August of that year? I remember it was 2011. My mind says it was August, but I'm not quite sure. All I remember is that I was doing an article for the European edition of the Wall Street Journal when I did that. Ruby saying, okay, it says, what you closed your shorts in Amazon. And what do I think be the level today? I think we've started down, folks. If you remember, we talked about the trade of the day. I'll bring that up here. So we were doing this in the Tesla because the fact that the Tesla was due sharply higher, and it got as high as 1716 overnight. It was trading around 1780 on the opening, and from that level, it started to gradually move lower. If you'll notice, I'll bring these up one at a time just to update these because these are intraday charts. You'll be able to see that the Tesla went all the way down to 1552, then rallied up to 1625, and that's when after that 1625 was in, I suggested that once it got below the 1600 again, that it should not get above that 1615 to 1625 again if it was going to be bearish. And as the trading gods finished the day, let's get this up here. You'll see that the Tesla did get right down to the low of the day. We got down to 1480. That was a full 250 points from the high that it made overnight. So that's probably an indication that the Tesla has made some type of a top in here. I think we have Mr. Z on the line. John, how are you doing this morning?
Larry, I am doing very well. I'm pleased to hear you're doing the same.
Living the dream, baby. Staying on the green side of the grass. What can I do for you, buddy?
That's right. Like the green side. Say, I just have to share an observation and a pat on your shoulder. The price of Apple Corporation stock from Jan 19 to Jan 20.
Hey, we got to pay a few bills, Mr. Z. We got the commercial. Can you stay with us?
Sure thing.
We'll be right back, folks.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks. We're chatting with Mr. Z from the Tiger Den, and he has some questions about some ABCD patterns. Is that correct, Mr. Z?
That is correct, sir. In fact, for those people watching in the Tiger's Den or on YouTube, TFNN, they will see what I just posted. That's since January 2019 when Apple shares bottomed at 142. Apple shares printed a high this month at 399 to form an exact AB equals CD rally pattern over the span, of course, of 18 months. Mm-hmm. And I write kudos to Larry P. for use of simple AB equals CD patterns.
Well,
as I say, just kudos. And I can't tell you how much I value how you have demonstrated the use of some very simple and clear tools for getting all the news and all that jazz, how some simple tools can be incredibly powerful. So thank you.
Well, we also have to forward that on to H.M. Gartley because he was the one to first put it in print back in 1937 on page 249 of his 600-page book because he was the one that really put it out there first. But it does work. I posted that long-term chart that you just talked about into the den, and you are correct. At $3.99, it hit a brick wall up there. Well, sort of brick wall. It's only backed off about $25 from there, but it did $25 in 2 days, which for Apple, that's a huge move. So we'll see if it continues. But some type of a major top has been hit here because we had so much divergence between the Russell the Dow Jones, the NASDAQ, which has been the leader, and the S&P 500, which did not make new highs. So my assumption is, given yesterday's action, that we are probably still headed down, but it's still early, and the game can change in a heartbeat. The Fed comes in with their stroke of a pen and does another $1 or $2 trillion. So there's enough news out there to change the environment in a heartbeat, John. That's for sure, because they just keep pounding away. I think all the news people that should send Trump flowers every day, because if it weren't for him, there'd probably be nothing to say.
Yes, very true indeed. So let me think. I'm going to leave it simple as that. Not to clutter the topic today. That is just incredibly simple, and from time to time incredibly powerful. And your work, or put it this way, the work you have taught and application thereof, it doesn't let you forecast the future with any high degree of certainty. But as a trader, when you have these sorts of tools and you've done the work in advance and you see price come together, either at time marks or price marks, you can take a speculation, commit your capital, limit your risk. When you're wrong, you'll lose just a tiny amount. And from time to time, you nail things with absolute precision, and sometimes big time. And of course, in the case of Apple, at this point, it's precise. It's nothing big, but it is precise. So it's just awe-inspiring for me. And when you use it, it's profitable. That's the best part.
Well, yeah. Once it becomes yours, it really puts it in perspective of what you really need to do. But hey, thanks for calling in, pal. We really appreciate it, and also your comments about the wheat when Rich was on yesterday were well founded. So thank you very much for that. Also.
Good. We'll look forward to listening to Shane. Thanks.
Okay, you bet. All right, that was Mr. Z, folks, one of the best traders that we have in the Tiger Den, and he is one of the best. Let's talk just a little tiny bit about the fundamentals, since someone just asked a question. Folks, that's the most difficult part for me, is to take the fundamentals and just push them aside. That's why I keep things as simple as possible. People send me emails all the time about the exotic fundamentals that are happening and conspiracy theories and all those things. And frankly, folks, I wish you wouldn't send them to me, because they're over my pay grade. They really are. I just have to look at the charts, and if it's got a pattern that I can take a shot at, I'm going to take a shot at it, because I know that the odds are, most of the time, 6 out of 10, I'm going to be close enough to the finish line that I'm going to have a profitable trade. And when I'm not, I go on to the next one. And and I do have strings of losses, 6 and 7 and 8 in a row, but I also have long strings of profitable trades. So it's all about probability, and you have to be able to understand that you really need to do that. That's one of the things that I focused on in that Fuller Trader's manual, is the handbook is the fact that it's all about pattern recognition, and it's all about being able to discover when the losses are there. Those are the ones that you have to pay attention to. The profits will take care of themselves. We just got lucky yesterday in Tesla. I described what I thought was going to happen, that it was going to rally up to a 78% level, and that number came in, and this is $1,700 stock, and the number was at 17.17, and the number went to 17.16 in an actual trade, and from there we traded all the way down to 14.85 in one day, folks. That's 230 points. I mean, that's a huge move in that stock. That's more than 10% in one day. So that in itself is telling you that somebody has made a decision that maybe Tesla has gone far enough. If you'll remember, we did post the chart from hold on just a second, from Tom DeMark yesterday, and Jerry's saying who can follow the fundamentals. Well, a lot of these people that have these big computers certainly can. And these algorithmic traders, they are alert to buzzwords that happen in the news cycle, and that changes them from negative to positive and positive to negative. What these key words are, and when they see those, the market automatically comes in, and they do automatic trading. And if you're not prepared for that or close to it, then you've got to be able to make your decisions a little bit quicker. We've got that type of a situation going on now in the U.S. dollar index, which I'll talk about in just a second. Just look at this Tesla on a weekly basis from Tom DeMark. He charges an arm and a leg for this thing, but this was sent to us by one of our subscribers. But this is a sequential pattern. I had no idea that that's what we were looking at yesterday. All I was looking at was the 78% retracement. The market at opening higher because of good earnings, and the thing went down, and we got basically lucky. That's what we're trying to do. So we're just trying to do. Oh, by the way, folks. For information, we'll have Shane on at the break. I will not be here on Monday and Tuesday. As you know, those of you that Saturday, Sunday, Monday is the triathlon Ironman competition here in Tucson. And me being the last year's winner, I have to get ready. 877-927-6648.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archive subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and our guest today is Shane Smolian, thewolftrader.com. Shane, how are you doing this morning?
Good morning. Is this the office of Duke and Duke?
This is it, 100 South Broad Street. What do you got for us today, partner?
All right. Well, I'm going to start out with some Corona for everybody because that's everybody's favorite topic of the week. So this is the United States graph here. We've pushed up to 61,000 new cases. We just passed, I believe, worldwide, we just hit a new total on that to a new record. This is the number of tests that we have per country. So when I talk about Corona, I always like to emphasize the fact that the United States is now number one in the testing, and therefore we're going to have more reported cases. And I'm going to explain to you in a minute why that's important. I'm going to show you some graphs, and I'm going to show you the actual death counts versus what it should be normally. So this is the United States. United States is the number one country testing. Now this is in Arizona. This is Arizona actually here. So this is a graph of the death rates of COVID. And this line here is like a moving average of what the normal rate is here. And you can see back in 2018, we had a flu, and Arizona is actually rising pretty rapidly here compared to that. So there's certain states that are definitely having hotspot outbreaks versus the others. This is the United States. So this gives you an idea of this moving average. Just like I said, is the normal number of excess deaths. The flu in 2018 was here. COVID was here, where most of this was New York City. And now we're actually almost back at that line. So even though the numbers are climbing, the numbers of excess deaths in the United States are not really too high when you look at it as a whole. But there are certain states that are hotspots. For example, this is New York. New York was responsible for most of those cases. You can see at the back here, the flu in 2018. This was COVID. The peak in April, and then actually New York's starting to creep up again. So New York is actually starting to see an uptick again in cases. So we got to watch New York closely because they're always at risk being in such close quarters. This is Texas. Texas is you can see here compared to the flu that they had a almost equal response to the flu. It's a little bit more with COVID here, but it's very similar to the 2018 flu. But they're definitely on the rise too, and my home state here, Florida, you can see that the excess deaths here, this was the flu in 2018, and we're definitely above the line, but it's nothing crazy like we saw in New York. So I just wanted to put that in perspective to everybody because we need to look at it in terms of excess deaths, because when you just count COVID deaths, that's not necessarily a good metric. Now, the next slide here is this is really important because this is how I track COVID. I track the cases per number of tests. So in other words, if you give more tests, you're going to have more positives. So if we look at it this way, the peak was actually in April 11th, which was pretty consistent with what we saw, but the low was on 6/16. And we've definitely seen an uptick here, but it's nowhere near the peak. So if you look at the media and you watch the news, you're going to think that we are like, shooting through the roof in terms of cases. But if you divide it by the number of cases, we're nowhere near that. We're actually somewhere back into about mid-May right here. So I drew a line across here and then a line down here. So mid-May. Now I want to show you that compared to the chart of deaths in the United States. So here's where it is. Here are the deaths. So if you take a look at the deaths, I'm going to go back and forth between these two graphs so you can see them. You can see that these two plots are almost identical. You see that? So I believe that my model here is actually a closer case of what's happening. And if you look at the deaths, we're actually back to where we were somewhere in pretty close to what the other one was. It was somewhere around May, June, somewhere around there. So they're very close in terms of what's going on. So I don't want to downplay COVID because the one thing people have to remember is that this is the summer, and these types of viruses, these coronaviruses, these encapsulated viruses, they don't like the heat. They don't like the humidity. So the fact that this is spreading now is not a good sign for the fall. So I don't want to, make it sound like this is not a big deal. But this is the proper way to look at it in my opinion. Okay.
This is good stuff.
Thank you. All right, so that's enough with the COVID. Let's talk about the markets. Fear and greed index. So we actually hit a significant high. It couldn't get above that 55, 60% level, but we actually got up to 68, which is pretty impressive on this rally. This rally did not see any type of a real surge in terms of fear and greed until yesterday and the day before. And I've been talking about how I think we are really at some type of an important high in the markets. I have so many topping indicators coming in here, and I'm going to share a few with you. And the rest of them I do talk about in the newsletter and my daily reminders that I send out to people. But I think everything's lining up here. I think, even from the perspective of the Fed, everything is lined up here now for us to have a significant high in the markets. So if we take a look at the fear and greed here, this is the actual line. And you can see that this was the high here back in right around January. And then this was the COVID low here, those March lows. And you can see that we actually did come up and make some type of an impressive sentiment high here. So I think that's good. I mean, you want it to be checking off all the boxes down the line for a move to happen. And this was something that had been lagging. And now it's actually finally starting to come into play here. So from that perspective, it's good because I know a lot of people like to track just sentiment on the markets. Now, this is the graph that I use. I show the daily subscribers and also the Twitter subscribers. This is the S&P 500, and I track it against the Fed juice down here, which is this red indicator. And I know it looks like there's a lot of arrows on this chart, but the red arrows are the Fed juice. So every time the Fed juice is in a buy, the market's tracking this Fed juice pretty well on this uptrend so far. And the Fed juice is in a sell. It's been in a sell for quite a bit. So that's the first checkbox we want to look at. The other one is let's look at these RSI values. So, RSI can be a tricky thing to trade because when markets trend, these RSIs can tend to stay high for a long time. When you get momentum or stochastics, when they get above that 80%, those stochastics can stay up there in a trending market. But what I do think is important is we should go back and look at every single RSI that was able to turn a market. Okay, so each uptrend is unique and it has its own behavior. Okay, so in this particular uptrend, if we go back and look at these, the 63% turned it here. This was one of the first tops here. 73% turned it here. 75 here. 69 here. 93. This was the June high before the eclipse. This is 73 here, and then 78. This was our most recent high here. So one of the things I was telling the subscribers was this was the second highest RSI of this whole uptrend for a potential top. So, from that checkbox, we were at a reasonable place for a high into here. So that's good. I mean, that's another box to check off. If you're a counter trend trader and you believe in fading the market, that's a good sign. We also have this CAT indicator. The CAT indicator is I'll get back after this.
Got to pay a few bills, yes. We'll be right back, folks.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks. We're talking with Shane Smolian, the Wolf Trader. You want to continue, my friend?
Sure, Larry. Okay, so we were talking about this S&P, that the RSI has now hit that second highest level. The Fed juice is in a sell, and the Planetary Speed Index, which is really an important indicator to look at, I think the most important astro indicator, is going into a sell today at the close. So this is actually turning before the Planetary Speed Index is in a sell. So I kind of saw this a few days ago, and I really had us. I put us in a downside advantage. I think this one, Larry, I think this can be the one that you're looking for. I think this can be a big sell-off coming because we have so many things lined up. August is one of the worst months of the year for the S&P. It is the worst month of the year for the S&P. People don't know that. If you look at the last 12 months or 12 years or so, August is the worst performing month. We're actually coming into a solar high right now. So I'm going to show you this next graph. This is just one of the graphs that I have on my service. I put these all together for the subscribers in what I call the CAT file, which is one big chart to look at. But you can see here that we're just passing this solar cycle high here. This is like an annual cycle, and this came off the low here on 625, surged all the way up. So from this perspective, the month of July was relatively bullish. Now I had us turning earlier, but I still think this has time to catch up, and this essentially falls through all of August. Now, for those of you who are subscribers, you know I talk about this COVID transit. There was a transit that passed exactly over near the March lows, and that's coming out around early August. And I'm going to talk about that in next month's newsletter in great detail, because I think I actually have it to the exact day, I think the hour too. But all of this stuff is coming up, and this is some really heavy energy coming up here in the next few weeks. So I'm definitely much more bearish now than I had been on this market. And here's another reason why. Let's talk about the Fed. The Fed juice has been declining from the raw aspect here. The Fed juice has been declining since probably about May, and you've had this divergence here, this negative divergence here. Now, usually the market will catch up to these types of divergences, and I think that's what's going to happen now. When you look at the S&P priced in terms of Fed juice, I look at this not in terms of dollars, but in terms of Fed juice. We actually hit a high here. We haven't seen this since the March lows. I talked about on these March lows, we were at extreme low values. Now we're actually overpriced in terms of the Fed juice. So there's another checkbox for you to check off in terms of bearish indicators. The weekly Fed juice is actually starting to show a flattening out here. This is the one that you got to have going up, or the market cannot go up. This one is actually starting to turn lower too. Now, it hasn't turned lower. It's flattening out. The Fed could reverse course, but so far they're not. And when I see something like this, I get very concerned because this is a problem. I think this can become a problem for the longer term investors. Okay, so now let's talk about the dollar. This is something this week I've actually come up with a new indicator to go along with the Fed juice that I call the dollar juice. Because we've seen such a destruction of the dollar here with the Fed, this is the gold on the top chart here. You can see it going up, and then you can see the dollar falling here. So there's always an inverse relationship. Anything that's priced in a currency, when that currency goes down, the asset is instantaneously, spontaneously adjusted higher in terms of price. And the same thing happened with gold here. You can see here back on April the 7th, you can see here on April the 7th that when this was falling, that gold was rising. So there's a direct relationship here, and sorry, I get distracted. There's a direct relationship here. So when the dollar falls, asset prices rise. This is what's happening with gold. Now, gold is being very sensitive right now, but when we had that big drop the other day, that's when gold took off. So I feel like I need to start looking at the dollar more. So this was one of the things that I was looking at. This is the S&P. Okay, it's the same thing. S&P here went into this buy, and dollar went into a sell. This is a pairs trade. You can see here that there's a spread that these two make. So this was the spread on the June high. So back here, this is the June high right here, right? The same exact spread just happened on that 78% top right here. So you can see here that here's another checkbox that's checked, that you have a lot of things lining up here. And so this is really important. So I want to introduce to you now, this is, I have a new indicator here now called the dollar juice. So in addition to the Fed juice, I'm going to be tracking how does the market respond to the US dollar, because that's important. I just showed you those charts. The dollar is not the same thing as the Fed, but you can see here, this is the blue arrow. This is the dollar juice here. This is the dollar juice down here. This has been in a sell also. So in other words, the dollar is falling, but the S&P should have been rising faster. In other words, it's been the dollar has been floating this market in the past few days, okay? But given how hard the dollar is falling, the S&P should have been rising more, and it's not. So you got to look at this on a relative basis. Now, I know I'm going fast here, but I'll try to get through all these charts. All right, this is the kicker here. Because the dollar is intraday, I can make intraday dollar juice charts. So on the Fed juice, it's once a day. I have to collect all the data, and at the end of the day, I get the Fed juice. This one, I can take the same technology that I use on the Fed juice, and I can put this intraday. So this is a 4-hour chart. So this is the dollar juice here. You can see this indicator down here. This is the S&P up here. This is the dollar here. And what this indicator does is this tells me when the S&P is in a sell relative to the dollar. So what happens down here is, this is a 4-hour chart, so this is intraday. So the exciting thing about this is that if we do get a market crash type of a scenario, that I'm going to be able to look into the intraday charts now and see when this is bottoming relative to the U.S. dollar. So this dollar juice is really important. So this is a new feature that we are adding. And on the Twitter, we're putting this throughout the day. So, and in addition, I can create a dollar juice for every symbol. I'm just starting with the S&P, but this is like really important because right now the dollar is really taking center stage with all of these commodities. And this is why you're starting to see this inflation. This is one of the reasons why. I think the Fed is another reason why. But you can also do this dollar juice on different charts of like intraday charts. So like this is an hourly chart, right? This is the dollar juice on the hourly chart. So you can see that you can see the sensitivity here in the market. So this is the S&P up here, and this is the dollar down here, and this is the stochastic of the dollar. So it's very interesting. So every time you start to see the dollar start to rise, so like this is, I'm going to go back here. So when the dollar rises, the market falls. You can see that inverse relationship there. So there's a very strong relationship here recently, okay? That when this dollar goes up, the market goes down. When the dollar goes down for multiple sessions here, multiple bars, when the dollar goes down, the S&P goes up. So this is why I'm looking into this dollar as the next big forecasting tool that we have at Wolf Trader, because now I can put this with the Fedgies and I can look intraday. And one of the things about yesterday's sell-off that was significant, and I sent this out to subscribers. I told them, I said, look, this market is going down, but it's going down with the dollar. And when that happens, you start to see some really heavy selling. So you can see here that initially this started falling with the dollar. And when that happens intraday, you get these bigger sell-offs, because once the dollar starts to turn up, then the market's going to really have issues going up on its own. So
we got to pay a few bills. Stay with us. We're going to be right back with Shane Smoyan, thewolftrader.com.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Bam! If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, talking with Shane Smoyan, the Wolf Trader. Shane, you want to tell the folks how they can reach you? And you've got a lot of products that they might be interested in. Maybe you could go over it quickly for us.
Sure, Larry. Real quick, you can email me, Shane at wolftraderfutures.com, or go to the website, www.wolftraderfutures.com. There's a chat there. You can chat me on the Wolf Trader Futures there. So I return every email and every chat. It may take me a day, but I return every single email that I get. I've been getting a lot lately, but I promise you I will get back to you if you have a question. So please don't hesitate to write me in with a question. the services that we have right now. I have 5 different newsletters, and these now have daily updates. The S&P has a daily update on the website, and I actually have a messaging app now for subscribers, even newsletter subscribers, where you get a few messages every day, and then I'll let you know what's going on. It's not like Twitter. Twitter is constant feed that I have, but I have S&P, metals, energy, currency, and cryptocurrencies. But the S&P and the metals are the 2 most popular newsletters. And so each of these newsletters come with a 7-day trial period. They're $39 a month. So, you can kind of pick and choose what you want to do in terms of which service. This is the website here. So it's Wolf Trader Futures, because I know there's a lot of other Wolf Trader sites out there. It's Wolf Trader Futures. And then this is what it should look like. And then you can go there under pricing plans and sign up. And then each of these newsletters is up here at the top. So check it out. Go there. There's also a free email sign up. So definitely go there and sign up for the free email list so you can get notifications and updates in terms of what's going on. And, we're all over the social media. We have Facebook, we have Twitter, we have Instagram. I'm also on StockTwits now. I just there was a subscriber that recommended that last week. So I actually signed up on StockTwits now. So I got to put that up here too. But, we're growing. I'm slowly trying to get my presence out there. But, this is, Larry, as you know, this is a one day at a time process. And particularly when you're dealing with the S&P 500, this is one of the trickiest markets. I mean, this thing it's difficult to get right. So,
hey, thanks for joining us. Have a wonderful weekend, folks. We'll see you next week.
Take care.